All right, welcome everybody. We are live, and this is the Volume Tells the Truth webinar. So, we are going to be talking about some lesser known volume indicators that I think are super helpful for kind of getting a feel for what's going on underneath the hood of any kind of range. So, as we get started here, welcome Tyler, welcome Glass Half Full. Good to see you guys in here. All right, as we get started here, let's pull up the webinar. Great. Welcome, guys. Welcome. Come on in. Okay, so move myself up here. Checking one ping, and then we will get right into it here. There we go. Okay, great. So we are going to be talking about some really interesting indicators that you might not have heard of. So everybody's heard of like VWAP, for example, but there's some more going on underneath the hood there. We're going to be talking about a couple of these. You might have heard their names, but not really know how to use them. So it'll be a really good kind of intermediate to advanced lesson here that's building on a lot of the concepts we were talking about in our previous lessons. Stuff like just reading pure volume analysis or volume profile analysis. We're going to use these as building blocks to help kind of fine tune this with tools like CVD, CVI. We're going to be talking about money flow indexes like the Chaikin money flow and a few other ones like the advanced decline line and a few other things here, the OBV, that are going to help you kind of fine tune a little bit about what's going on with the volume overall. So today, like I said, talking about these. Sorry about this little block. Let me
Hey, folks. We're just working on this right now. Steve's taking a step away and coming back, and we'll kind of figure out what's cooking there. Um, okay, and my audio is clearly coming through Rumble, so that's cool. Um, give me. I'm getting like 2 copies of myself, so just say like 1, 2, 3, or here. Hold on, I'm gonna mute the tab. Give it a second, and then say like 1, 2, 3. Something. Steve, can you say something now? Nope. Okay, yeah. Unfortunately, they can hear me through Rumble, but not you or Rumble, YouTube, all of them. So I checked on Rumble; they're saying the same on YouTube, and it's clearly uh, I can hear you through the studio. It's just for some reason it is refusing to send your audio to the show, just yours. So no. It's fine. EVMux is clearly picking you up, and you're in the scene, obviously. So, um, I'm just trying to think of what, if anything, can be. I don't want to necessarily have to recreate everything. We could do that maybe, but there's no question. You know what? Also, we don't even know if that would do anything because it's clearly something weird in UVMux. I think it has to be. You know what I can do? I can do a stupid trick here. Hold on, I'm gonna do something horrible. I'm gonna route your audio from. I'll just do it from Discord. I will route your audio into the thing here. So let me give it a second, and we are gonna do a crazy hack, and we're gonna get your audio fed through, and we're gonna get this done, and we'll just have your audio coming from me. So this will be fun. Bear with us, folks. We're doing it live. Okay, and I'm just going to do something here and make sure. Monitor off on my other thing, and then I will actually. All right, go ahead and say something again in Discord. Just say something again. Okay, I'm going to just change this. In fact, I can actually just change my output device right to. Okay, say something one more time, please. Oops, sorry, I didn't see the one. Say it again. Can you say one more thing there, Steve? Hmm. Check. Okay. Let me see one more time. This should work, actually. Oh, that's why. All right, say something one more time again. Perfect. All right. I'm now going to route that into
type everything out, yeah, text box, yeah, text box, yeah, text box, yeah, text box.
There
Well, I'm hearing edit.
we hearing you now. There 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 we hearing you now.
Yes, I am.
Muted Telegram. 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 Muted Telegram.
Okay, everything is going insane. I'm trying to mute. I'm trying to whatever I can to stop the echo, 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 to stop the echo.
Wait a second, Steve. 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 Wait a second,
need permission to do that. 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 Okay, okay, okay. All right, all right. Let's see, let's see. Let me know if this is working. 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 Let me know if Discord is good. Okay. The ability slash permission to restart the stream. Permission to restart the stream. Permission to restart the stream. That is unfortunate. Yeah. So I'm getting some mixed feedback here. Is audio working here? I don't believe it is. I don't believe it is. Delayed audio. Okay. So something is coming through, but okay, so I'm going to do my very best. It sounds like something's coming through. It's cutting in and out. Okay. Putting the mic right up to my face. I will try to go about this, and I really hope it works. All right, apparently it's working on Rumble. All right, so we're gonna give this the old college try, guys. If you are still here, this has been very rocky. I'm not sure how much cut. Okay, it sounds better is amazing. 'Cause we're getting nothing. Okay, guys, so I'm going to give you a power rundown of this because I believe probably most of the audio lost. Still getting echo on YouTube. Interesting. Okay, keep me posted. I'm gonna try to power here. If it doesn't come through well, I re-record this for you guys. I'm gonna try one more thing to get rid of the echo cancellation here. Okay. All right. So this should no audio on YouTube. We can only hear you. All right. I'm not gonna touch anything. Okay. All right. So I think that I think that we figured this out, guys. You guys are amazing for sticking with this. I will make this worth your time. I will not beat around the bush here. I'll give you what you want to hear, get you on your way to start your weekend. So, thank you so much. We are talking about volume indicators that you might not be super familiar, ones that are less common than just your view apps, for example, but can really tell you a lot. So we're going to go over 5 that I think are nice and important. I'll go over my favorite 2 in detail. We're going to be talking about some breakout setups, what you can look for to see if a breakout's going to fall through, as well as what you can look for if the breakout is going to fail. Awesome. I'm so glad we're back, guys. You're awesome for sticking with us. Okay, so let's get right into it here. We're going to be talking about CVD. We're going to be talking about CVI, AD, CMF, and OBV. It's a lot of acronyms to throw at you, I know, but there's a few in particular that are really important. You're going to walk away knowing how to use them, knowing when to use them. We're going to be talking about how to identify smart money accumulation and essentially being able to identify in a given range whether price is being accumulated by big money or distributed or getting ready to be distributed. We're going to talk about volume divergences, how we can trade those, what we can be looking for, and we're going to be going over how to specifically time those entries with precision. And we're going to be talking about, like I said, spotting those fake breakouts versus real. So, how many times have you guys entered a trade and thought, this is perfect, it's the ideal setup, A plus, and then it reverses on? I've been there, you've been there. We've all gotten stuck in these fake breakout trades. They can happen to any of us, but watching these volume signals are going to be a big game changer. If this is a problem you face. Okay. All right, great. Audio's still working. Cool. So let's talk about the truth here. The truth is that price can be manipulated. when you're trading within a range, very often what seems to you like a major dip or rip, breakout, could in reality on a higher time frame just be a liquidity grab that allows smart money to position themselves better for the next move. So where you think the sky might be falling, they might be sitting there saying, "Oh, nice, my order long just." While you think it's a breakout to the moon, they could be saying, "Hey, I just don't this. I'm going to rebuy when it's half that price," something like that. So in that case, what we're really looking for is how to find these footprints of institutional money. So we have 5 indicators today that we're going to be talking about to help identify those. And if I do my job, you will learn how to read their playbook effectively. So volume matters more than you think. And let's talk about why. The general idea of the smart money footprint theory is that institutional traders, whether they're hedge funds or banks or large corporations, they can't really hide what they're doing. They can't hide their activity completely because it's so big. They're trading in such size that if they just bought their position outright, they would move the stock too much. So to get a position, they have to build it on dips. They have to build it at key levels. And when they do, they're going to leave traces in the volume data. And these footprints are going to appear in these cumulative volume indicators long before they're going to show up in price. And that's what we're here to find out. So these 5 indicators are great for these reasons. They're each going to reveal a little bit of a different component of institutional trading behavior. And when you combine them together, they're going to give you a more complete smart money picture. And let me throw the slides up here for the Discord guys. Sorry about that. There we go. Okay. And there. Sorry, just trying to navigate back to my presenter window. There we go. Okay, great. And so where was I? We are talking about how we are combining these together to create confluence and create a more complete picture of how smart money trades. And these are systems that are used by hedge funds. These are what big money does to move positions and to build positions. And so that's why I think it's worth knowing. Retail traders tend to trade outside of these parameters, whereas on the bodies of candles, you'll see that institutional volume come in from institutions, of course. The wicks will often be comprised of price action of retail, on FOMO or greed, dumping their shares or buying into, crazy moves. Stuff like that is not going to be profitable long term, whereas finding these systems definitely will be. So the first indicator is cumulative volume delta. What it is it's going to track buying versus selling volume at each price. And what it's going to do is it's going to basically reveal this real-time institutional order flow. So it's going to show who's in control, whether it's the buyers or the sellers. And it's created bottom right here. It's going to be most relevant, I think, in really short time frames. I've actually found it very responsive on like 1 or 5 minute candles to pinpoint reversals. But you can also look at the hourly here and look at it day to day to get a picture of what is going on underneath the hood. So in this example, we're going to be working with this for the next couple indicators. This is SPY this week on the hourly chart. So what I think is really important to look at is price action on this day right here, where we pop up pre-market, we sell off fast, and we stay right here until close. So what we can note is that on the bottom here, on this first flush out day where it recovered, despite then today, or on this day, I should say, it gapped up. Despite price actually closing or opening lower than the close, the CVD was up. So that shows a divergence where despite price not following through yet, we're seeing buyers under the hood basically accumulating in this area. We flush out again in the morning, and what do we see all day? It held the level that it dropped at from yesterday, and then it pushed up off of that into close. And so what that's showing is despite it not pushing on the price at the end of the day, there were buyers under the hood, especially in contrast from the day before. So these 2 days act as a nice loading area, an accumulation zone for the follow through that we saw today, right out of the gate. So that's that bullish divergence that we're talking about here. When price is declining, but we have CVD rising. So that's buying accumulation. If we were to see the opposite, price rising while CVD is falling, then we would essentially be seeing distribution occurring, or likely distribution occurring. where they're offloading their inventory at a high price, but nobody's really buying up here and pushing the thing higher that much. It's just retail, if anybody. So, just this alone will have about a 75% accuracy rate. These reversals can pay really well when they hit too. So it's really important to be looking for these divergences. Going on to the cumulative volume index, we have where this is going to be, as opposed to the candles of the previous one, this is going to be a one-line indicator. And what it's going to show you is pretty simple. It just measures the advancing versus declining volume over time, so it's going to give you a really clean indicator of essentially just where the money is flowing, So overall, it's going to reveal if the market is participating and the amount of strength that it has on any given move. And I'd say the key insight here is that it can kind of dictate, or it can hint at the breadth of institutional participation. So if the market keeps on, getting inflows, we're obviously going to see a good move. Okay, sorry, lost my train of thought just for a second there. Okay, looks like we are still good. And if the audio stops working, please let me know. I feel so bad about making you guys watch me say literally nothing for 20 minutes. So moving on, let's go into another example here of the CVI again. So that using the same hourly candle example of SPY, let's look at this same line right here. So while the market was going down these 2 days, we saw CVI holding very steady, even slightly going up. So this is that same divergence that we saw with the CVD, just showed in a different way. And as you can now see, we are just ripping up here, as we should, so we're breaking out, and the CVI is showing that more participation is coming into the market, into the highs up here. So very bullish, very bullish. Going into the next one, we're going to be talking about accumulation versus distribution line. So this is another single line indicator. And, since these often can show similar things, I'm just giving you a little buffet of what's out there. You don't have to use all of them. I think probably that's a little bit overkill. I recommend starting with the CVD and then maybe one of these line indicators. And then you can kind of build off from there if you need more confluence. But it's good to know what these are and see which one fits your trading style best. So what the accumulation distribution line is essentially going to be the cumulative money flow based on the close versus the range. So this one's a little different from the previous one and how it's calculated. This one's going to take the close minus the low, and then it's going to subtract that from the high minus the close. And then it's going to divide that by the high minus the low divided by the volume. So you don't have to remember all that, but what's important to know is that it's basically integrating the previous range into into its calculations. So, excuse me. So you can often get a little bit more fine-tuned levels in the same way that you would using ATR or some type of indicator like that that's using that same type of range built into the formula there. So on the chart, this is going to look like just another line indicator, this one up top here, and it's going to be the same basic principles here. So if you have the rising AD plus a rising price, that's a strong uptrend. That's confirmation of an uptrend, right? If you have a rising AD and flat price, that's probably going to be accumulation before breakout. So this is the daily SPY chart right now, and I thought it was worth bringing up for this example because we're seeing a flat AD that's now starting to push up. So we're seeing a rising AD while price is the exact same place it was previously here on this last little uptick. So what we're seeing here is a bullish divergence in the AD, where the AD is leading us higher before the prices, and we should expect price to follow. And on the flip side of that, if we were to see a falling AD combined with a rising price, that could be a sign of that distribution. So let's see if we got an example of any of these bearish ones on the move up here. So we had price going up, and we had sideways trading there. So I guess no major divergences there. But a falling AD plus a falling price is often going to be downtrend confirmation here. So we got the falling price, but we didn't see the falling AD. So no confirmation of a downtrend, just a pullback in a bigger uptrend. So moving on to the next one. This is a fun one. So this is the Chaikin money flow. And what this one is it's going to use a 21 period moving average, and it's going to use that to calculate the money flow volume. So it's another one that's similar to VWAP in that it is tied to a moving average, but the moving average is tied to the volume at any given time. So that will make it a little more reactive, a little more responsive, and I think a little more valuable. Give me one sec here. Oh, I'm seeing you got the little bar up there. Let me fix that for y'all. I'm going to take the display down for 1 sec and then pop it back up without that. Bear with me 1 sec here. Almost there, guys. Thanks for your patience. Boom, look at that. Nice and clean. All right. So we were talking about CVD, CVI. We were talking about accumulation and distribution lines. And now we were talking about the check and money flow. So with the check and money flow, it's going to Testing, testing, 1, 2, testing, 1, 2. Still no. Okay. It's back. It's back. Interesting. You can hear me now. Excellent. Awesome. Okay, great. So sorry, guys. I'm really not sure what's going on here, but we're going to power through here. We don't have too much more left. We're going to make it happen. So there's my presenter window. Here is the OBV breakout pattern. I'm not sure how much you heard here, so feel free to let me know if you want me to rewind anything. But essentially, the OBV was just showing that there was a level across here. We're going to be looking for new highs. We did see a little tick new high. That was a little sign that we're going to break higher. And again, what was resistance on this day? Oh, whoops, I'm sorry. You can see my cursor here. So there's a line here at the bottom, the dotted line. On this day of price action, it was under the line. Then on this day, trades over the line. Pretty clear line of resistance that turned into support. At the end of the day here, you can even see that it ticked above it, kind of indicating its hand that it wanted to push higher. So that's something to consider with these OBVs as well. And in general, these can precede the breakout. As you can see, pre-market, there was a little bit of a lead. Maybe not. Maybe it just happened as it went. But as it was very clear that this was a level and we're pushing higher, and it's held above there all day. So the power of confluence is super important. Any one indicator is great. If you can stack them, you're going to get a much higher hit rate. I won't bore you with this too much. Keep it simple. One indicator, 60 to 65% accuracy, right around there usually. If you stack two of those, you're looking at more like 75. The higher you get, the better it gets. 3+, and you're often looking at a 90% likelihood setup. So as long as those indicators are giving you different information and it's a valid confluential setup, you should really be looking to size up on these 3+ indicator confluence setups. Going into kind of a more complete analysis, like how the framework would look for this, how you can use these to help analyze any situation. Here's what I kind of look at. So first, I kind of look in with the check in with the CVD, and I just look for the general order flow direction, like we looked at with that CVD example where it jumped overnight. I really like to see that. I like to see that move happen from one day to another. And intraday, I like to see the 1 and 5 minute CVD start to turn around as well and post a nice bullish divergence where price is maybe trading flat still, but the CVD is starting to curl up. So I like to confirm when the market opens with the CVI. With the CVI in the first hour of the day, I want to see that continuing to climb high. If the market pulls back a little bit, I want to see the CVI and the CMF, the check and money flow index. I want to see those hold strong, showing that people are willing to buy the dip. And although the price might be dipping a little bit, inflows are still coming into the market and looking at these dips as opportunities to get long. So you can validate this as well with the AD. And this is just one more level of confluence there. You want to see that same kind of price action happening there. And you'll usually see the CMF kind of do it a little bit earlier, and then the AD will confirm that. Same with the OBV. I find this lags just a little bit, moves more with like the AD than the CMF. So that's just one more confirmation after everything else. And you can kind of use these to build a general perspective of whether or not a move should stick. So let's go into some examples real quick. I will get my face on out of here. So what we got here is a fake breakdown, or a fake breakout, I should say. And this is going to be BABA, the hourly chart from a couple weeks ago. So a few things I want to talk about here. The first thing is that on a fake breakout, you're going to see the price break resistance, but the CVD be declining. So what I want to look at here is this range up here after the breakout. So we got the breakout, and here's the CVD on the breakout. It was nice and green. But then overnight, what does the CVD do? It opens up lower, first off. That's not a good sign. And then when the cash session opens, it drops like a rock. And even though price recovers decently by the end of the day, that's a divergence. That's a bearish divergence showing distribution, because price is up here at this level, but it hasn't been pushed up there on big volume. You know, the big volume is actually selling up here. And then it's like they stopped selling a little bit, and then price pop back up, but then overnight, boom, you see these heavy selling patterns on the CVD there. So there's the declining CVD, if this was a bullish breakout, we would expect this to be holding at least above the even, and we'd like to see it up here around where it was at the end of the yesterday. We definitely don't want to see this, and we definitely don't want to see this on follow through. That shows that the move is just not ready. It failed the breakout. The CVI should show weak participation. So CVI is going to be, actually can't tell on this one. I believe it is the top line here. Yeah, it's the top line. And as you can see, sure, it's up from this day. It's up here, but it's just trading flat. It is not showing a strong increase. What's interesting is that this actually spikes a day later. I'm not really sure what to infer from that, but what I do know is that it was trading flat and it couldn't push up on this day, and then the price couldn't get continuous, immediate continuation. So the AD line going to be right here, not showing, not confirming breakout. This one actually was up on the day, so this would be the 1 out of 5 that I would say does not apply in this situation, to be fair. And there's just another real world example of how not everything is going to line up, and it's all about kind of taking the net analysis from all of the indicators that you're using, and not just being too hyper focused on just one. So from there, we're looking at the CMF, and we're seeing if there's selling pressure. So again, right here, pre-market drops right at market open. It cannot pick up all day long, even when price goes up intraday. The CMF shows that no new money is coming in, and we just see a steady drawdown in that over the next couple days. So pretty reliable there. And the last thing is OBV failing to make new highs. Let's see. Got to lean in here. OBV did make new highs. So there you go. There's another one that didn't actually check out here, but this was indeed a failed breakout. So let's compare that to a real breakout here. So this is coin from quite a while ago when it surged from, what is that? 250 to 320-ish. Yeah, maybe a couple months ago, 3 months ago. This was a fun one, a really clean example, so I like to use it a lot. So a real breakout is going to have, in general, all 5 indicators aligned and rising. So as you can see, these, I got to zoom in here, but in general, leading up to this big breakout, you're just going to see an inclination for these to want to move up. And sure, they pull back a little bit, but in general, they are holding steady while price is going down, or they are rising while price is going sideways. So let's see. Where was I going with this? My brain is frying out here. Anyways, we're gonna power through. What we see in general is a big uptick in the CMF. In the CVD, I think is really telling, because on the breakout, it's massively green. On the days up to it, it was nice, and it was trying to show life over this equilibrium for a couple days before. There was a small dip the day before, but it ended the day green there. That's pretty notable. And then the next day, just big surging here. And the following day, see, it doesn't have to be up here, because remember, this is just above this midline means money's coming in. Below means money's leaving. So as long as it's above the midline, that's bullish and showing inflows. So it did drop to the midline, but then it showed initial buyers. It did have 1 day of potential distribution where it was sold off, but then the next day it was bought back very strong. And this move did continue to 400 plus, I believe. Yeah, it swept all-time highs. So yeah, that is kind of what you're looking for there. The same with the CMF. Like, there's kind of an equilibrium you can see. And right before breakout, it was at this equilibrium, and it surged up. And sure, the money did kind of fade off, but then it came right back in. So just some differences you can kind of look for there on a failure versus one that followed through. Now I want to talk about, in a similar concept, just overall distribution patterns versus accumulation patterns. So before we were looking at breakouts versus failed breakouts, that is an accumulation pattern versus a failed accumulation pattern. This, you could look at it similarly, but in general, this is just overall how we identify a pattern as distributive from the start. So right here, this is ENPH, the solar name N phase, and it's a really good example of what we're talking about here. So the CVD is going to be showing, we want to see it going down in general, but it can go flat if price is going up. So for example, in this period here, where it ramps up to sweep these previous highs, we see price obviously going up, but what do we see on these indicators up here? We see flat during this period. And the CMF is showing flat as well as the OBV. So price is going up, but all these money flow indicators are going sideways. That's telling us that when price is going up here, it's just giving people who have a position a chance to get out up at the top of the range, but it's not showing that people are buying for a range expansion. So if we were to see that accumulation in here, we would want to see the CMF and all of these other indicators going up with SPY or with the index, and we would like to see on the dips them going sideways and not trading back down and having moving with the candles there essentially. So CVI was declining to participate. The AD line was is going to start kind of rolling over to strengthen price. So we're starting to see that towards the end here where it can't make these previous highs. It's just dinking along here at the exact same place it was all the way back here. It's done nothing. Price just went higher. It couldn't do anything. It seems like it's stuck in the mud to the upside, but to the downside, it is moving down a little bit. So that's kind of the precursor here. And then this is the follow through. Just falls straight down, trades sideways a little bit more, but ends up just dribbling all the way down to about half of its previous value. Oh wow, even less. Yeah, it went. It lost 2/3 of its value in this move. So what we are seeing in the follow through is just see how it was trading sideways, and then it started to be kind of sketchy up in this area here that we were watching. Then it's just steady, just near straight down. And money flow is a little bit more deceiving, but in general, look how much of its time it spent below equilibrium, below that horizontal line, compared to the very few times that money flow went positive, and each time it did, it was sold off relentlessly. So that's kind of the anatomy of a distribution pattern in regards to these volume indicators. And let's look at an accumulation pattern really quick here. So this is Reddit. And this was Reddit a little bit ago. And what we're seeing here is after the big parabolic move and the market crash, it came and settled in this zone, built out a nice base. And while it was doing this, we were seeing the money flow and the OBV doing some interesting things. But what I want to talk about first is what we're seeing the CFI and the AD line doing. So it was pretty flat here while the market was puking its guts out. So that's interesting. That's showing a resilience, right? Because it's holding up and not that much money is actually leaving. Scared money and like short-term traders, they're puking their guts out and the price is getting affected by those sellers. But smart money seems to be saying, hey, we're not leaving. We're not worried. What we're looking for is this to start ticking up because that'll show that smart money is not only not worried, they're adding back in. So what we're seeing here, price sideways volume indicator showing sideways while price goes steeply down. Then price goes sideways. Volume indicators start climbing up very steadily. Now we are at consolidating at this key part of the range, right? We're halfway through the big range. That red line's the 50% mark. Comes up and it starts coiling and consolidating right underneath there. So what are we looking for in our indicators to see whether this is going to break up and out or whether it's going to break down, whether it retests this base or whether it retests the highs. So let's see, we should be seeing CVD building, buying accumulation. So over this handle, this is the period that we want to watch. Since this handle, for the most part, these have been going up. Little tiny pullback at the end, but really just going up. And the CMF's very interesting here. So it went down a little bit, but then went up very strongly, even stronger than where it was before. So it's showing accumulation pretty clearly here. Same thing with this OBV. This one's starting to turn up pretty sharply, and it's broken the previous range. These are all those bullish indicators that we're looking for to lead the price. So based on this, I think it's pretty safe to say that this is bullish accumulation. Obviously, we know that in retrospect because it did this right out of the move. Big, powerful explosion on high volume there. So again, all of the things were in place there. And now since then, since the breakout, we're seeing the same thing. Grinding higher on these CVI and the AD. Chaikin money flow is trading sideways a little bit, which makes sense because we're coming into the high of the range, the old highs, and we're negotiating this. So we're seeing buyers coming in, expecting it to go much higher, and then lower, and also sellers coming in, after they've held for their target to the previous all-time highs. So because of that, we will see some chopping here, totally normal, and we should see consolidation before CMF starts leading us higher again for the next wave higher there. So yeah, this is a good example of an accumulation pattern done right. Let's talk a little bit about a little daily analysis routine you can do using volume here. So pre-market, you can do what I was talking about with the CVD and check those overnight volume patterns. On open, you can analyze the surge of volume, and what you're going to want to see on that opening half hour to hour of volume is continuation of the pre-market volume in terms of directionality, and you want to see essentially the move that comes with this volume to stick. So that's what you're looking for the first hour or so after the open there. And then midday, you're monitoring your volume indicators, and you're basically looking for alignment there to make sure there aren't any divergences between these volume indicators and price that start occurring. Because if they do, it'll usually happen after that opening surge of volume, and then you'll start to see that fade, and you'll start to see the divergence in the short-term volume indicators there if the move is going to be reverted. If it's going to be held, you will be looking for the confluence between the directionality of the volume indicators and the price candles to continue. And just into close, you're going to set up the next day kind of volume-based trades. If there's something you're looking at, like, okay, this one looks like it's under accumulation and there's a nice volume node above, a nice clear target for the next day, you could maybe place a long trade going in there, or maybe you could look for an entry for that push on the next morning's volume surge on the open. So you could be framing the trade to play it there. So that is just some actionable tools you can use to integrate this into your daily routine. And another thing is just really quickly about sizing. If all 5 of these indicators, or if your whole system is aligning, take a big size, take a max position size. If you don't have that confluence, that's okay. You don't have to necessarily completely sit out the trade. You can take a B grade setup, or maybe maybe you have S tier, A tier, and B tier, and maybe a B tier looks good, but you're not sure that it'll work, so you take it with half size. And that's totally fine. And I think that's what good traders do. They use incremental sizing based on their conviction, because our edge comes from our ability to, derive edge from the market, to find nuance, to find granularity, to make things from a binary coin flip into an actual, tradable edge. So anything that we're doing that makes the thinking more black and white is probably going to hinder our profitability, and we should probably be looking to do the opposite in that. So, you can take setups that aren't 100%, but just be cognizant that they are not the top setups, and they shouldn't be given the top dollar, essentially, in terms of allocation. So some common mistakes here are pretty straightforward. Let me move my face. There I am. Using only one volume indicator can be sus. You can get some false reads there. I like having 2 that are a little bit different. I like the CVD, and I've been using the CMF as well. You'll always catch me using VWAP as well, and you'll always catch me using the volume profile. But just in general, having like the volume profile plus an oscillator like the CMF, I find that can give me some nice differentiations in tells that I can use to get an edge. So ignoring volume and breakouts is always a bad idea. Just don't do it. If there's big volume, don't fade it. Unless of course there's big volume and no big price move, and you're getting a secondary indicator that's confirming. You know the deal. But in general, pay attention to volume and trade with the trend. If price is moving with volume, trade that direction. Don't fade that. So another thing is don't wait for the confirmation, or is not waiting for the confirmation. You just gotta sit in the pocket and wait for that back test more often than not, unless it's a really well-defined level and there's a big, reason for a big volume to come in, and you catch that big volume on the breakout. And you can only trade breakouts if you're willing to get stopped out if the breakout fails. That's the rule. So if that's you, if you're doing that right and you're sizing appropriately, sure. But otherwise, wait for that back test, wait for that confirmation. You will get less setups, but they will be much higher. Higher profitability and higher follow through. The last thing here is just misreading accumulation on different time frames. So what might look like accumulation on an hourly chart could be just setting up for an internal liquidity grab, a big push up, but it still maintains the previous bearish range, and you could be seeing a surge to reach up to find sellers at a higher price. And your misinterpretation of a bullish accumulation on an hourly is really part of a larger bearish distribution on a daily or a weekly. So that's something that's super important, and that's why we always analyze from high time frames in, and we don't get too tunnel visioned on any one time frame. We make sure we're looking from a holistic approach there. So, going on from that, let's talk about building that volume edge there. So definitely start with one or two of these indicators and then add in and see if you keep gleaning more information from more. There I am. And that should be your kind of general philosophy for kind of anything you're adding to a trading system. Just start slow, add it in, and start observing. Don't start trading everything you see based on this one indicator. Don't start using it as your only indicator. Just start integrating it and seeing how it works with the system you already have. So start with that. Combine indicators for confirmation. Like I said, you just want to stack them up. You want to have multiple indicators in confluence for you to take any setup. I don't care what time frame it is. I don't care what indicators they are. You need to have more than one reason to take a trade. Otherwise, you could just be seeing things. So from there, we're going to work on developing pattern recognition with these systems. So like I said, just throw them on your chart and start seeing what they do. Like when we walked through all 5 of those indicators, how they all interacted during that breakout on SPY this week, that was a really good case study for me because I got to experiment with all of the little nuances and just see how each one of them felt into and out of this breakout. And so they all reacted a little differently, and I learned a little bit about which I like personally a little more than others. And yeah, I recommend you do the same there. The last point here is just to create systematic volume-based strategies using these. So you can use these in combination with some of the other systems that we've talked about. Some of these things like a VWAP break and retest, or a fake breakdown and reclaim of a pivot, something like that. Using these in combination with these volume indicators can be just super high probability, and that's the basis of my trading system. So just some things to consider there when you're trying to build out an edge based on all these principles, which can seem kind of abstract and, you're just kind of floating around in your head in a vacuum, and it can help to kind of bring them in and think about them as part of your bigger system. So here's some key takeaways. We covered a good amount of different indicators and how to use them, but we can keep it pretty simple. In general, the CVD is going to reveal the real-time order flow in the battles between bears and bulls, and you can see that playing out in a candle just like you would a price action candle. CVI is going to be showing the market participation breadth, showing how much legs a move may have based on the participation overall. AD is going to be tracking smart money accumulation and distribution in just a one neat line. This one's a nice one to just kind of have if you don't want to have too much clutter on your screen. CMF is going to be a little more intricate. It's going to measure the buying and selling pressure and the intensity of that pressure. And so that one's going to be a little more fine-tuned and probably my favorite out of these besides the CVD, which I just have on all my charts. And the last here is the OBV, which will just confirm the volume momentum direction. So this one is a little bit slower. So when this activates, it'll often confirm an earlier signal that you get from a CMF or a CVD. So those are the key takeaways from these 5 indicators. Oh, sorry about my face there on top of those. And I think that's a good place for some Q&A going on. If anybody has any questions, we can go over any chart examples or, anything else you might want to talk about there. But thanks so much, guys, for just bearing with all of the technical difficulties there. I will have those ironed out by next week and figure out what the heck went wrong there. But hey, we made it. Awesome. Thanks for tuning in, Mike. Good to see you, and have a great weekend yourself. ALTS had a big move, you're saying? Check that out. All right, I'm going to switch to charts. Can you see the last slide real quick? Let's see. I just shut it down. Let me pull it back up for you. Yeah, sure. The last slide was just Q&A. It was just your questions on the previous things, but I can pull up the key takeaways for you there. Give me one sec. Okay, here's key takeaways there. All right, now we're going to check out ALTS, still moving up apparently. New day highs. All right, we're going to check that out in just a sec. ALTS. Yeah, it's been a fun week. I have been mostly just taking care of other things, hanging out in swing trading. I haven't been doing too much day trading. ALTS pushing very nicely. Cool move there. But man, the rate sensitive baskets, these are moving. My KRE trade's playing out very nicely so far. This one has big legs if it wants to go. If it wants to break the big pennant, but I think it's definitely due for a test of this downtrend line. Love KRE. I want to see RILY play ball. This one's not working out. Solar names doing great. Another big candle for tan. It's testing this megaphone breakout real nicely. FSLR. Holding the 20. That's what we look for. That's what we look for. Boom. All right. Was I not showing my charts? Oh my goodness. I am so out of it. All right, let's get you on charts here, and then we'll get you out of here and start your weekend. There we go. All right, FSLR. You guys know I love this one. It is reclaiming the key pivot. I think long term this thing is going much higher. Carving out a really clean double bottom handle here, right over equilibrium of the major range. This thing is a powder keg. Everybody was wrong. Solar's not dead. Give me 500. Tan acting very right. Off the 9-day EMA, even stronger than FSLR. Nice megaphone breakout here. Once it's through this congestion range, it can fly up to this zone here. FSLR on the daily, by the way, holding that 20-day beautifully. Someone mentioned ALTS. That's a nice move off the 20-day moving average and this key level of resistance. Flip to support. We zoom out even further. What do we get? Looking good to me. Looks like a Livermore accumulation cylinder that wants to surge higher, go parabolic. Could go crazy. This thing has short interest. That's a cool chart. All right, what else do we got, guys? TAN. TAN is the solar ETF. That's what TAN is. This one is pretty darn pretty long term. I think in a year this one's going to be a lot higher. We got the really nice channel breakout. Got a nice curved bottom off here, tapping into really key zone long term here. If we go back even further, we can see that this thing has done all of the work. It already bottomed out super hard. Stayed here for years and years and years, made the parabolic move, swept out again. It is setting up for another big climb in the next couple years, probably. Back up to here, I do believe, at the very least, back up to this big ol' volume shelf. And likely, more realistically, somewhere in that zone. But the potential here, long-term for solar, is that that could be the low. And it could eventually go way the heck back up higher. This is a mega beatdown sector that's probably bottoming long term, if not forever. So good time to pick up some of this in your long term accounts and not look. And if it drops to a significant amount, you probably buy more. MDB. Tyler calling out MDB, Mongo database. That's looking tight. I'd like it more if it was over this 200, but that is a tight pennant. Let's draw it out. Very nice, very tight. What are we looking for? Is it on stilts or is it constructive? What we are looking for is first finding long-term base. There it is. See our high volume point of control there. We are going to draw that out like this with a point of control. I'm going to mark the top of this shelf and the bottom of this shelf. There's your rough core, I'd say. Your rough core, and you also have another big one down here. So what we can do is put a long-term one down there too. See that it responded very neatly to there. Perfect. So let's fine-tune this one a little bit. Yeah, that looks fine, actually. In general, this looks bullish. It looks constructive. It looks like it ran parabolic and then has been trading in price discovery mode consolidation for 5 years now. So there are reasons to believe that it could push higher. I like these angled lines like this. This all looks like overshoot to me. Yeah, that looks like the real meat and potatoes of the trend line there. So I think that's kind of what we're looking at here. Let's pull out these old fibs and see what we see there. First off, pulling back from all times, we should see that the 50, or I'm sorry, the golden pocket. Yeah, so look at that. That's really precise too. From all-time lows to all-time highs, you get 2 swipes of the stop run level, that 0.78. They love to retarget this level to sweep out anybody long up here, saying, oh, it's going all the way back. But nope, it came back down to the 0.786, and then it found buyers there after you sold your shares. That's what they look for. Also, it was into this previous base where it broke out from. Very, very nice. We came back. We revisited that. We held the lows. That's important to note. Now we have weekly moving averages curling up and under. On the daily, we are still fighting, though. So, into earnings, this makes sense. I would expect an earnings beat to flip these moving averages bullish. Big green candle. Up here, back test. Push higher, something like that. What we would not want to see is a rejection. So it's going to be sketchy into earnings, but it does seem bullish to me if we look at all of our indicators that we talked about today. Money's trying to get back in, but it hasn't shown anything too major. There is a bullish divergence, though, that I'm seeing. So see this swing high, this swing low up here. So down, up, down, a little up. We have down, up, a little up. But this up here, price came up here. Price has not broken higher there, but the CMF showing that buyers are in. So that leads me to believe that this is accumulation. Good chart. I like this one. We'll keep an eye on this one into next week for sure. The USA said no more money to solar. Still need to bottom more. I think that what they say and what they're doing is out of alignment and people are too darn bearish. And I think you have the consensus opinion, and I'm not saying you're wrong. Well, okay, maybe I'm saying you're wrong a little bit. I think you might be wrong. I think that that narrative is changing and things are not as bearish for solar as people think. In terms of how that actually looks in the details and the fundamentals, I'm not that guy, but I do know that smart money is saying we are done going down on this chart. Yeah, I'm pretty bullish. I'm pretty bullish on solar. Okay. I'm going to get ready to wrap up here, guys. If anybody has any more questions, feel free to drop them on in. Crazy to me, 84 viewers. You guys, we had like 40 or 50 when I had technical difficulties. You guys all waited. I appreciate you. That means a lot. I'm seeing Mike mention BYON. Did I look at PFE? I know you love PFE, Michael. Yeah, I actually like it now too. I haven't looked at it today, but let's talk about it. So this is, I drew this a while ago. I think probably last time you mentioned it, and it did something pretty similar, so I wanted to talk about it. So from this point, I was saying, okay, it's backtesting this key level, but I don't think it's quite ready. Probably needs to structure out a little bit better and undercut something and reclaim. So it did undercut the level. Came back, yeah, right to the 50% of the drop it held. So it filled in this little bubble here on the point of control or volume profile. Now it reclaimed the bottom of the big volume shelf, and I think it gets dragged up here next to this 2650-ish handle. 26 30 is the area, and it almost got there. I would expect it to go a little higher. Maybe it squeezes up and back tests. But what we have gotten so far is the undercut, the reclaim, the back test, and that was just about right there. We didn't get a super clean pop through and back test, kind of just drifted through. But we are seeing the curling up here now, where we have reclaimed the 200. I think these names have a lot of legs long term. I think this is a time where you can start building a position long term, because these things have been so beaten down. And I mean, it's just an ugly chart, but like it's where it should start to catch. Like, I don't expect it to do anything crazy, but like, even if it just gets to the 200 week, it's 20%, not bad. So other names you can look at are Moderna, but these are like rough. So this one in particular is looking still pretty rough, but it is trying. It's trying its darndest to hold these pre-breakout levels. Lake, they make masks. This one's setting up pretty nicely. I do like this name. Be watching this one for a long-term hold. Assuming we do get another pandemic at some point in the next couple of years, you can buy this and sell it for a double then. Just don't go crazy and buy an insane amount, but, you know, allocate like, you know, 0.05, I'm sorry, like 0.5% of your port maybe or something to these type of plays, and they can just easily double for you if you're patient for 6 months. All right. So I think that's mostly what I have to talk about. I will leave you with a few picks that I have for next week. KRE, watch this one closely. I think this is an absolute powder keg of a sector. I think we should get follow through on these now that we've gotten confirmation, dovish confirmation from Powell today that he's not going to do anything crazy. I think we have a pretty straight shot into at the very least or very earliest end of the month rebalancing, and more likely into quarterly OPEX halfway through September. So I think we have a nice window here where we can get a really big outsized return on rate sensitive plays like KRE, like the solar names like TAN, like things like biotech. Look at that weekly chart. So these are names, or I'm sorry, sectors and names that I'm very interested in. Look at XBI, just buy it every time it's off that 9-day moving average. You're in business. Same thing with KRE, 9-day moving average. Buy it, you're good to go. These things should go higher. Watch for that next week. And the last chart I'll leave you with. Okay, never mind. There's 3 more. IWM, look at that breakout stick right into this key level. So we're watching this, seeing if we can go higher. If so, we could go much higher. I am not saying that's going to happen. IWM loves getting sold off. It could very easily surge for 2 more weeks and then die horrifically. I kind of think that's what will happen, actually. That being said, watching that, and what I think will be really important are watching HYG and JNK. We're watching high yield bonds, both trying to break out from massive bases. If this is the case, this could be what we need for IWM to stick a move. And in general, this will be an everything rally, stupid, dumb, make people mad type thing. So keep an eye out for continuation on these. They sure look good. And if high yield debt is going like this, then I would have to imagine that the age of grift is just getting started, and we are just just in the middle innings of these types of plays. So keep an eye on these. That is where my head's at going into next week. For SPY, we are breaking out. Continuation breakout after double back testing, a 3-week consolidation into blue skies. These things are not bearish, folks. Go buy some stocks. Thank you for hanging out. I will see you all next week. Yeah, HYG is impressive, right, Mike? Absolutely. Thank you guys so much for tuning in. This has been fun despite all of the difficulties. Thank you so much for bearing with me through those. And I will see you guys next week. Have a great weekend.